A very good evening to one and all again. I am Sandeep Ansali from the team GIBS Business School, Bangalore. Today we all are virtually connected as a part of GIBS Light of Knowledge webinar series, and today's topic is financial services. I welcome all the participants to this webinar on behalf of the entire GIBS family. And before we proceed further, just please allow me to speak few words about GIBS Business School, Bangalore. Global Institute of Business Studies, Bangalore, GIBS is a place where talents are nurtured, ambitions cherished, ideas shared, and dreams fulfilled. GIBS Business School is a part of Goal Educational Trust, which is an exclusive business school based out in Bangalore, and we are an AICTE approved institution, provides PGDM program and BBA Bangalore University affiliated BBA program. To provide its students for success, GIBS has introduced a number of unique programs like Innovation, Research and Entrepreneurship Program, Finishing School, Business Mastery Program, etc. Since our inception, we have an excellent placement track record. Our students have been determined to be industry ready by majority of the biggest corporations. Throughout the course, we ensure that there is a proper balance of practical and theoretical knowledge. GIBS has recently awarded as a Teaching Learning Efficiency Award by India's top prestigious Higher Education and University Awards 21-22. In 2021, GIBS has ranked AAA by Career 360, 11th Best Emerging B School by Times of India, 19th Best B School of Eminence in India, and 12th Best B School in Karnataka by Competitive Success Review. GIBS is also featured by Forbes India as a New Age B School and Best Emerging B School by Outlook 2022. So, GIBS has introduced a free national and international level webinars, leadership talk series and panel discussions on trending topics like GIBS spreading the light of knowledge. I would like to extend a warm greetings to Mr. Girish Kosugi sir, the MD and CEO of Can Fin Homes Ltd, the resource person of today's webinar. Sir, we are grateful that you have accepted our invitation and to be a part of this webinar as a keynote speaker. It's our privilege to have you, sir. Today's topic is financial services, and it's my honor and privilege to introduce Girish sir to this distinguished audience. Mr. Girish Kosugi is a banking professional with over 24 plus years of experience. Sir is currently a managing director and CEO of Can Fin Homes Ltd. He has an extensive experience of managing assets and liability and has gained an expertise in mortgage, retail lending, SME and agribusiness. During his career so far, he has worked with the brands like HDFC, ICICI, IDFC and Tata Capital. He has dealt with varieties of loan products such as home loans, bank loan, personal loans, mortgages, deposits, rural and retail products, etc. and gained wide experience in handling sales, product, credit undertaking, risk and operations. He has significant experience of retail banking for over 15 plus years in Bangalore, Hyderabad and Kerala. Apart from an experience of about 10 years in credit risk indulging, including risk-based verification strategies for loan products, measure credit expansion opportunities in the lending market, validate and implement the credit risk model. Giri sir is a graduate in commerce and he has also done his masters from Bangalore. Sir, the profile is really long, so please pardon me to cut it short. So I request all the participants to please post your Q&A or doubts in the Q&A section. We'll take it up at the end. Sir, without wasting much of time, I would over to you, sir. You can just take it over and we'll take the Q&A at the end of the session, sir.
Sure. Thank you, Sandeep.
Thank you so much, sir.
Good evening to all the participants. Financial services is a very big subject, very wide subject. It's very difficult to cover in even one full day. So what I've done is I've just picked up one segment of that, which is the housing finance company. So today we will try to understand about housing finance company, especially how they operate in India. So what we'll do is, there is a presentation which is about 45 slides. Don't get scared looking at the number of slides. That's only use that only as a reference point. So we will I'll try and give you some insights about housing finance company for about half an hour, and we will give half an hour for Q&A because I'm sure you'll have a lot of doubts to clarify, and therefore I thought instead of 20 minutes we will have 30 minutes for Q&A. Feel free to ask me any questions. Please jot it down, and once Q&A session opens, you can ask me any question. So here we go.
Yes, the screen is
Yeah, yeah,
visible, sir.
sure. Is it visible? Yeah, Anup.
Yes, yes, thank you.
So if you look at the basic needs, food, water, shelter, and clothing, shelter is very, very important. But if you look at the entire, cycle of a customer, I think home loan comes in at the last. So it starts with unsecured, basically credit card, then small personal loan, and then of course two-wheeler loan, and then car loan, and then at the end, you'll get into home loan. So because it's a long-term product, it's about now there are bank which offers about 30-year loan, right? So home is very, very important from economic activity point of view, from GDP growth for any economy. Mortgage is very, very important today. If you look at the penetration, it's about 10% in India, which is very low compared to many countries in the world. So it comes as part of basic needs. So I think by definition, home loan are the ones where you give loan for home. Whether you want to buy, whether you want to construct, whether you want to buy plot and then construct thereon, whether it's a purchase, whether it's a resale. Purchase is from the developer, and resale is buying an independent property, which could be a home, which could be independent bungalow, or it could be an apartment from another individual. So basically, loans given to all these purposes are categorized as home loans. If you give loan against a property, then it is called loan against property. That's called mortgage loan. In broader sense, mortgage would include both home and LAP. Home loan is for first time purchase, which is not against, it is for acquiring a property. And the loan against property, by definition, it is loan which is sought by giving existing property as a collateral. So housing finance company, I think, housing finance company, all the HFCs are part of NBFCs. NBFCs would have so many categories. You have HFCs, you have MFIs, you have basically non-bank. NBFC is non-bank finance. You have banks and you have non-banks. Within non-banks, you have so many categories. HFC is one such category of companies under NBFCs. So earlier, the regulatory body for housing finance companies was NHB. Now that has moved to RBI in terms of policy formulation. Yeah, as far as supervision is concerned, it's still within NHB. So we have a dual authority. Of course, RBI is supreme. Below RBI, NHB is the one which all the HFCs will have to comply with. I'll be a little fast because we need time for Q&A and we have a lot of slides. Okay. So I mentioned about RBI. I think that's the overall regulatory body under which all the housing finance companies, apart from other NBFCs, would come under. So obviously, why one would take a home loan, sense of accomplishment, because there is an emotional connect, and real estate as a class is very, very beneficial, at least in India, in last many, many decades. I think surely from a capital appreciation point of view, if you had bought plot, maybe I think your parents would have bought maybe some 10, 15 years. I think today the returns it would have given you maybe 10x, 15x, 20x. I think sure capital appreciation. And today we are in a low interest regime. It was there for last few years. It might continue for another few quarters, and then of course it may start slightly inching up. And there are certain benefits, with respect to interest and the principal repayment on the loan which one borrows for acquiring a home. And if you look at housing shortage, I spoke about the penetration in India. It is very, very low. It's just about 10%. And if you look at the shortage, it is huge. I think these are some numbers, as of 18, but in reality, the gap is huge. It's substantial. And there's a lot of demand. And therefore, we say that real estate as a space and housing as an industry will do well for, next few decades. There could be ups and downs. So generally, real estate cycle, especially the housing, it's a 7-year cycle. 7 years it will do well. Then there is a blip, and again it'll start doing well. But in the long run, I think housing is an industry, and real estate as a space will do very well because land is limited in a country. Land is limited. We might be the second biggest country in terms of population. In terms of geography, we have a huge land, but still, I think land is you can't produce extra land, so land is limited, and therefore the value of land will appreciate. Land is an appreciating asset, and so is the property, whether it is an apartment or an independent house. Right? So there's huge potential, and I think that's the focus now, even for the government. So these are some of the loans. If you want to buy a property, there is a loan. If you want to construct, there is a loan. If you want to buy a plot and construct, there is a loan. It's called composite. So these are some of the loans. The need could be different. The reason could be different. I think end of the day, anything to do with property, I think there is a loan available. These are some of the products. And in terms of interest rates, they earlier we used to have a fixed rate. Now, because of huge fluctuations in the interest rate market, I think most of the banks and companies do offer floating rates. So there is fixed, there is floating, and there is part fixed, part floating. So these are some of the options. So for any company, raw material is required, and for a finance company, whether it is non-bank, whether it is into MFI or housing, I think the raw material is funds, right? So there are various sources of funds. For a HFI, typically the funds are loan from banks. It could be OD, it could be CC, or it could be term loan. And National Housing Bank refinance. So basically, to promote housing, there is a budgetary allocation to National Housing Bank from government, so that money is utilized for pushing the needs of housing, and therefore NHB would refinance at a lower rate. I think why HFCs take refinance from NHB, because the rate is going to be lower, margin is going to be higher. Deposits. So some of the HFCs are allowed to accept public deposits. I think Can Fin is also one where we accept deposits. Market borrowings, basically commercial papers and NCDs. NCD is nothing. NCD is a bond, where you can raise, for term starting from 12 months to about 5 years. Similarly, CP is short term, maximum up to 1 year. So any corporate or any institution which has surplus money would place funds with us for a certain rate of interest for a contracted period, which could be as low as 7 days. It might go up to 365 days. So there are some of the drivers of housing finance. I mentioned some of this, improved affordability because interest rates are at the lowest, and therefore affordability has increased, because in last few years, income has gone up. Co-penetration, it's very low in India. As of now, it's about 10-11%. So huge gap to be covered there. There are a lot of government incentives, if home loan is availed, and there are certain benefits offered by government. And so of course, one is sheer allocation of funds. Number two is there is subsidy scheme available depending on whether the category is LIG or MIG1, MIG2. These are different categories. There are some income thresholds. There are some area cutoffs based on that. There is subsidy available, which means net, if a customer takes loan, especially in the affordable segment, which is low property value, low loan amount, because customer's income is low, customer gets some incentive in terms of cash. For we have various schemes where customer gets right up to about 2.65 lakhs. And there are so many other demand drivers, because housing as an industry would support close to 200 plus ancillary industries to grow. I think we have a huge demographic advantage, and the demand, if you see for next decade or two, would be substantial, because we have very young population. So you'll have a lot of people who will be ready for jobs, probably every 3 years from now, and therefore the demand will be quite huge. And a lot of urbanization is happening in our country. People are moving from small towns, villages to cities for their employment, and that also would push demand for housing. I think all these things at the background, I think housing is going to do well, especially in a country like India. So I mentioned about this. So we are at about 11% penetration for mortgage. If you look at some of the countries, they're at about 60, if you look at UK, it's 68%, Denmark is 83%, So we are very, very low, which means huge potential for next few decades, maybe 5-6 decades for us to catch up. So this is a graph which represent property cost or the property price. If you see the property price, from 2000 onwards, there is an increasing trend, right? And if you look at the income also is increasing, and therefore the affordability is coming down. So this only talks about the demand supply gap and how well the demand is supporting because of affordability going up by sheer increase in income. Only thing is, on the supply side, we have to take care. Demand is already there. On the supply side, government is taking a lot of efforts, and all the housing finance companies is trying to meet the demand. So these are some of the measures. So as I mentioned, government has come out with a lot of incentives. One is in terms of subsidies, number two in terms of tax relief for customers and also for developers, who specifically focus into affordable space. And in terms of liquidity, I think this is quite generic for all the banks and NBFCs. Whenever there is a liquidity crunch, I think RBI will pitch in and do certain operations, infuse liquidity into system. For example, last 2 years, because of COVID, wave 1, wave 2, and of course now wave 3, there has been a lot of challenge, especially for the self-employed non-professional, which is one of the profile. Basically, you have salary, you have self-employed professionals, self-employed non-professionals. The worst hit in last 2 years as a segment was self-employed non-professional, and if you look at as a percentage, that's quite substantial. So that is when RBI, came out with moratorium option, restructuring option for all the customers, which is basically repayment holiday for some time because of pandemic. So certain liquidity measures, which the government initiates through RBI, and on the supply side also there have been certain incentives, which RBI and Ministry of Finance government would come in from time to time to support growth. So I mentioned about bank and non-bank. So this is the comparison as of September 19 and as of September 2020. If you see, I think NBFCs, that is HFCs, are catching up very fast because banks would have certain challenge in terms of growing home book, because a bank deals with multiple products. So as many as 25-30 products they'll have to sell. Bank could sell many products, whereas housing finance company, it's basically one product. There could be various variants. So it's more of a just one product, many variants, everything to do with home. And therefore HFCs, they become a specialist organization, specialist institution to lend home loans, and therefore they have gained that expertise. So they are in a better position to grow the book much faster than the banks. The earlier one was the book, and this is the disbursements. So government has come with many housing schemes to promote housing, especially in the affordable space, because a lot of people in a country are still poor. And you must know this because number of people who pay tax, it's about 5 to 6 crores. I'm not sure what will be the number this year, but I think it's not going to be more than 6.5-7 crores, right? So out of total population of 130 crores, which means a lot of people, right? So there has been a lot of thrust, especially for affordable, and therefore a lot of schemes like PMAY, and so many flagship missions which government has come out with. We spoke about LIG, MIG. So all these measures, government has been taking this since last few years, and hopefully it will continue. These are some of the categories which I mentioned, and what is the subsidy amount. You can see that what is the rate, what is the subsidy percentage, what is the amount, and that is the income threshold. You can see for CLSS 6 lakhs, for EWS LIG it is 6 lakhs threshold, for MIG 1 it is 9 lakhs. These are different categories depending on the profile of customer, what is the income of the customer, and what is the area of the property which the customer is going to acquire. Customer would come under a certain category, which could be MIG1 or MIG2 or EWS or LIG. And therefore, accordingly, there is a interest rate and there is a subsidy given to the customers, as well as the HFCs would get funding at a slightly lower rate, so that they can protect their margins. These are some of the details on each of the income groups, that is EWS, LIG, and MIG. You can refer it later. So basically, how does a housing finance company appraise? Basically, there are two things. One is the ability, and number two is the intention. How will you know ability? You will know ability by looking at the financial statements. If someone is employed, you will refer to salary slip. You will see bank statement. You will see the returns filed, and based on that, based on the assets, based on savings and obligations, you will take a call. And second is intention to pay. How will you know willingness of the customer to pay is based on certain track record. For example, if customer has availed some loan and what has been the repayment behavior of the customer. So based on these two things, any company would take a call, and same thing is true for housing as well. So one is ability and second is intention to pay. In terms of technical, obviously you should see what is the value of the property. Value of the property is, let's say, 10 lakhs. Your funding is going to be depending on the category. If it is a uh, low property value, it will be up to 90%. That is 9 lakhs, which means 1 lakh customer has to pay. That is called as own contribution. So customer has to pitch in 1 lakh, bank will fund 9 lakhs, and total property value is about 10 lakhs. And approvals, depending on the zoning, you would know that, for example, in Bangalore, you have BDA, you have corporation, you have BMRDA. So this is called zoning. So there is a green belt, and then you convert that, and then if it is in city limits, it will come under corporation. And within city limits, if it is slightly away, then it comes under BDA and BMRDA. These are different authorities. So when we talk about approvals, I think all these projects or the layout has to be approved by the competent authority. So there is technical evaluation. When it comes to legal, when there is a property, of course, there is a change of hands, which we call as link document, which means the ownership of the property would have moved from one person to the other in last 30, 40, 50, 100 years. So there is a search which happens, and there is a title tracing which happens. So based on the credit assessment, technical evaluation, and legal scrutiny, a loan is given. And of course, there are certain ID proofs, which you are aware of, familiar with. So there are certain other documents which the company takes to evaluate. I mentioned about this, what is required for salaried. Salaried is one segment which is very, very significant, at least in the big cities. So somebody who's into business, obviously you need P&L account, bank statement, you need creditors list, debtors list, and some information about the business, a factory visit and the residence visit, and then the call is taken. Rest all is same, of course, apart from bank statements. These are some of the personal information of the customer which might be required, number of dependents, just to assess what is the expense. So I spoke about margin. So that is 10% is the margin. So 90% is funding. There are certain ratios, internally, which the bank would use to assess the eligibility. This is just to assess the income. So I mentioned about this. So if at all customer has taken any loan, then we refer to credit bureau, and there is a report. Based on that report will talk about what loan was taken to the customer when, and how is the repayment month on month. I think based on that credit history, overall credit assessment call is taken. I spoke about technical appraisal because every property has a value, and value is dynamic. It depends on where the property is, type of property, and what is the zoning. So based on that, the valuation gets fixed. There is something called as fair market value. There is something called as guideline value. Guideline value is the government fixed value, but in reality, the market value could be a little different, and therefore we always go by fair market value. So based on that, the loan is fixed. So loan gets fixed based on two things. One is the ability to pay, and number two, there's something called as LTV, loan to value ratio. So one is the valuation, second is assessment. Based on these two, the loan gets fixed. I spoke about legal appraisal just to trace title. We normally do 13-year tracing of title, and we check the linked documents at least 3 chains prior. These are some of the housing finance companies in India. I must have heard of some of these: HDFC, LIC, Indiabulls, PNB, right? So it's a big market, huge market, lucrative business. So a lot of these companies are there for last at least over 2 decades. And there is a regulatory authority. This is largely for the developers, so that the completion risk is taken care and the legal risk is taken care. These are some of the features of RERA Act. You can go through this in detail. I spoke about the outlook. I think market is very, very good. Housing finance as a sector is in sweet spot because real estate is doing well, and in this cycle it will do well for next 5 to 6 years. And housing also will do, because housing is a subtle way of which leads the economy to a larger economic activity. So if housing does well, which means the economy is doing well. If housing is not doing well, which means the economy is not doing well. And if you look at the last 2 years, when the entire country was reeling under COVID, pandemic, I think housing is one industry. There was a dip, but I think if you look at many industries, housing is one which did extremely well in spite of pandemic. Yeah. So basically, how will you assess, how the company is doing? Quickly, I'll show you one sample of presentation which we normally make, which any listed company makes to investors. So basically, there is something called as disbursement. This is purely in a quarter, how much of loans you give. I think that is disbursement. And when we talk about book, you give loan for on an average for 15, 16 years. So when you give a loan, every month customer pays EMI. So EMI is equated monthly installments. There are two parts in the EMI. One is principal, one is interest. So every month the outstanding comes down because some portion goes towards the loan repayment, which means the book will add. So every quarter or every month, what you disburse, the book keeps increasing, and every quarter you keep adding by doing fresh disbursements. So NII is net interest income. That is basically what is the income earned and what is the income you have paid. I think net is NII. This is one of the metric, which is measured for performance of a company. NIM is net interest margin in terms of percentage. For example, if your loan is at 10% and if your cost is 8%, right, then the difference is 2%. That is called NIM. So your yield is 10%, your cost is 8%, which means the gap is 2. That is the NIM. So cost to income ratio is, you have income as X and you have cost. So cost to income as a ratio is very, very important metric, and therefore, this also gets tracked. You must have read all these things. DR is debt equity ratio, right? For you would have read, I think, two times, as a threshold in your books. But for a housing finance company, it goes right up to 11, 12. What is as of now allowed is up to 12 times. We are at 7.32. And CRAR is capital adequacy ratio, which is 25%. Again, the requirement is about 15%. So gross NPA is bad loan. NPA means non-performing asset. Any loan which is not paid for 90 days is bad. Whether it is interest or EMI, if not paid for 90 days by the customer, then such account or such cases should be tagged as NPA, and there has to be a provision made against those set of accounts. So today, if you look at Can Fin, we are at 0.78%, which is best in the industry. We are the lowest in the entire country. Right. So approvals is nothing but sanctions. Disbursement is loan disbursements. Book is, of course, what gets accumulated, with every day disbursements. As a segment, I told there are 3 segments. One is salaried. Second is self-employed professionals like chartered accountants, cost accountants, MBAs, architects. And the third category is self-employed non-professionals, basically businessmen, whether they're into manufacturing, services, or trading. I'm sure you would have seen this. I think these are some of the key metrics, key financial parameters. which gets tracked and reported on a quarter-on-quarter basis. So approvals is sanction, disbursements, outstanding loan book, interest income, fee and other income, total income. So we spoke about all these things. Yeah, net interest income. So these are some of the metrics. Yeah. These are key financial ratios. That is return on average assets, return on equity, EPS, yield. I mentioned about yield. Yield is 7.99, cost is 5.57 for September 21, and therefore the spread is 2.42. So all these things get tracked. If a company, whether company is doing well or not, I think they track all these parameters quarter on quarter and also on a YOY basis. YOY is basically, suppose this year quarter three, if you compare with last year quarter three, that's called YOY. Sequential is comparing this quarter with previous quarter, that is sequential. So you can see both there. You have June 21, September 21, that's sequential. You have September 21, you have September 2020 as a comparison, that is YOY. So these are categories I mentioned. I think within mortgage, you have so many other categories like personal loans, then flexi lab, loans for sites, different variants. So funding basket, I think sources of funds. We spoke about CP, we spoke about NCD, which is debt. We spoke about public deposits. NHB is National Housing Bank, that is basically refinance, and of course, from banks, which could be either term loan, OD, or CC. So the right mix would help company to maintain good profitability. So this is PCR is basically what is your coverage ratio of provision against bad loans. So for example, if your NPA is, let's say, 10 crores, up to what extent you have covered, that is PCR. So in our case, it's 40%. Yeah. Yeah, I open for question and answers because I actually flipped through very fast because we'll have sufficient time for Q&A.
Absolutely, sir. So we'll take few of the questions which we have received it here.
Sure.
So I don't know whether this will relate to you, sir. Danish asked, best bank for educational loan or anything else?
See, there are, in fact, almost all the banks, they are into educational loans. I think in educational loans, there are two things. One is secured, one is unsecured. I think they have a cutoff. If I'm not wrong, it is 7.5 lakhs. So if you want to take educational loan, if you want to take a small ticket loan, I think PSU banks, you can approach PSU banks. If you want a high ticket loan, for example, if somebody wants to go to US and spend 1 crore of rupees or 50 lakhs, then I think you may have to approach private banks. But for that, what will happen, the student will be one of the applicant and parents will have to be as co-applicants. They will consider parents' income and then take collateral, which is typically a property, and then give loan. So there is a moratorium till the course gets completed. Once the course is completed, then the EMI will start. In certain cases, only interest will be paid till the course completion. And once the course is complete and once the student finds a placement, then the installment will start. But for a big ticket, collateral is a must. For small ticket, it will be unsecured without any collateral.
Great, thank you so much, sir. There's one more question. There's one question asked by Mr. Jay Kumar Suryanarayan. Why can't bank purchase and sell houses as a marketing trend?
See, that's not the business of banks. Banks' business is to ensure that they manage people who have excess money and set of people who needs money. So somebody who's into buying property and selling property, they're called different. No, it's a different entity altogether. The name is different. So instead of banks, if you are into buying and selling properties, there is a different entity. So their job is only to buy and sell properties and then make money. So banks' job is to ensure that they manage customers' requirement on both assets and liability side. People who have excess money, they will keep deposits, and people who are in need of money, they take loans. I think that's the business of bank.
Absolutely, sir. Thank you. Moving ahead to the next question, sir. Kaivalya asks, can we expect lower rate of interest on home loans in the budget 2022?
See, budget will not come out with the pricing policy. So pricing policy is announced by RBI, which is the central bank, which is the regulator. So RBI in its monetary policy will take a decision depending on the overall interest rate scenario. And then there is something called as repo, and there is something called as reverse repo. So suppose if there is change in repo, I think that would indirectly mean that all the PSU banks, all the private banks, all the NBFCs, whatever category, they will also change the rate. So it all depends on where is the interest rate movement, whether it is going up or going down. So government will not announce pricing policy. That is job of the regulator, which is RBI, and they meet every quarter and they take a decision, and then that will be as a guidance for all the banks to either up the rate or down the rate.
Okay, thank you, sir. Okay, the next question has been asked by anonymous attendee. They did not mention the name. Can it be dangerous to take an online loan, or how to take loan online?
So there is nothing wrong in taking online loan as long as you don't share password. You'll be getting so many SMSs from banks saying that please don't share your password. So you have to protect your password. And if you apply online and if you get loan, see basically people take online loan only if the ticket size is small. If you're taking 50,000 personal loan, which is called short term, which is called a small ticket personal loan. 50,000, 80,000, up to a lakh online is fine, but you will have to ensure that you approach the right institution for online loan. There's nothing wrong. You can make an online application, but home loan, it won't happen online because there are so many interventions required with respect to legal and technical of the property, and it's a long-term loan, and therefore, one meeting generally all the banks would insist before giving 20 lakhs, 30 lakhs, 1 crore loan. Small ticket, if it is 50,000, 60,000, 80,000, because the bank would have assessed your repayment capacity and also your intention by getting data from bureau. So for example, without even knowing who the customers are, and if I can collaborate with the bureau, I will get set of 1 crore data. Get means I will get information and it will be stamped, which means, for example, if somebody has taken loan for last 3-4 years, I know that if a person has to get so much of loan, which is why his income should be X, and it is 3 years now. So every year, if that customer would have got even, let's say, 8% increment, so his or her income today would be so much. And that customer, as per the bureau records, is servicing so much of obligation, and therefore this is the cushion available. And therefore, I can give 1 lakh personal loan, I can give 10 lakhs car loan, I can give 50 lakhs home loan. So I can do a pre-approved by stamping in collaboration with either with a bureau or with certain companies on the alternate data. If I know that, for example, Sandeep had traveled to US thrice in last 1 year, I know his profile. Therefore, by using that travel data, I know if he has to travel to US, how much he'll be spending minimum. So based on that, I can give him a credit card limit of 2 lakhs without even thinking. So like that, there is something called as pre-approved, pre-qualified. For a product like home loan, pre-qualified would suit, which means you are eligible for a loan of 30 lakhs subject to 1, 2, 3, 4, 5, and therefore you will do your due diligence little later. Otherwise, online is suited basically for consumer durables, which is you walk into a Chroma store, you buy a phone, and then So I think it's more suited to that, or maybe a two-wheeler or a small ticket personal.
Great, sir. Thank you, sir. The next question is asked by Venkateshwara Reddy. How will CIBIL score impact on floating interest rate in home loans?
See, CIBIL will not have a direct impact. Only thing is if you have taken a floating rate, which today, because any bank, any institution would only offer floating rate nowadays. And if you take floating rate, what happens if when the rate goes down, your EMI will go down, which means your rate also would go down. Let's say you take home loan at 7%, and if the interest rate goes down, your 7 will become 6.9, 6.8, 6.5, and therefore you will get the benefit. You may get the benefit either in terms of reduction in the EMI amount, or your tenor would come down. So you will get the benefit. Or if the rate goes up, your EMI will go up. or your tenure will be increased. So CIBIL has no direct impact. Only thing is if you take variable and if the interest rate goes up substantially and if there is no cushion available to increase the tenure, because somebody who is at 50 who takes a 8-year loan, if the interest rate goes up, you can't increase the tenure because the retirement age is 58. You can't go beyond 58. Some companies they don't do. Then they will increase the EMI. When they increase the EMI, because there is excess cash flow, you might find it difficult to pay, and therefore it might get into default and it might impact CIBIL. Otherwise, there is no direct impact of CIBIL whether it is floating or fixed. You're on mute, Sandeep.
I'm sorry, sir. The next question has been asked by Ms. Kampa Baliappa. So, can you please let me know about PMAY subsidy on home loans?
So you would have seen, I have given a copy of the presentation. You can refer to that. Basically, there are few categories. This is Pradhan Mantri Awas Yojana. The thrust is to ensure that a lot of people get covered under the scheme so that they get loan at a lower rate and they also get subsidy. So based on the income levels of the customer and based on the size area of the property which one has to acquire, so they will either fall into LIG or MIG1 or MIG2. Right. So based on that, there are certain SOPs given by government. For each category, the subsidy amount is different, which is mentioned in the chart. I've given a table and we have mentioned all the categories and the subsidy amount. So it depends on the profile of the customer, income level of the customer, and the area of property which he or she is going to acquire. Based on that, under PMAY, there are a lot of benefits which the customer would accrue, apart from the IT benefit which one would accrue for just availing home loan.
Okay, sir. Thank you. There's next question is being asked by Vishnu Das. I think this is little off the topic. My question is rarely apart from this topic, sir. Sir, coming from a BSc background, is it a good choice to take finance as my major specialization in my PGDM program?
Let me tell you, whether your background is BSc or BCom or BA, or whether it is BBA or MBA, irrespective of that, what you study and what you're going to do is going to be totally different. In most of the cases. So it really doesn't matter. Only thing is, if you're from a MBA background or a BCom, and if you get into financial services, it could be MFI, it could be CV industry, it could be two-wheelers, it could be NBFC, it could be bank, it could be insurance, it could be life or general. I think it will help you to a certain extent. It will help you to a certain extent. So in true sense, whether your background is BSc or BCom or arts, will not make much of difference.
Correct. Thank you, sir. There is one question by Rishikesh. He says, buying flat is better choice or making your own house?
See, I will tell you, if you can buy a property, which is, if you buy your own house, it's better. I'll tell you why. See, because land is an appreciating asset. Suppose you buy a 30-40 plot and you construct. Today you buy for, let us say, 50 lakhs plot and you spend another 50 lakhs for construction. Today it is 1 crore. So the appreciation on land is going to be far higher. So that means today your property is 1 crore. You buy a flat for 1 crore. And after 10 years, if you see what is the value of the flat and what is the value of the plot of the house, the value of the house is going to be more compared to the flat. For the simple reason, in the flat, you are getting only UDS, undivided share of land. So which means the land portion is very small in an apartment. Whereas in a house, independent house, the entire land belongs to you. And the appreciation on land is always better. The construction value is going to
depreciate.
Land is going to appreciate. So in an apartment, the UDS portion will appreciate. However, the construction would depreciate. Whereas in an independent property, land is going to appreciate, the building is going to depreciate. But the appreciation in the land is going to be so significant that the depreciation in the building is going to be insignificant. So, and therefore, any day, buying an independent house is far better, or buying plot and constructing house on that is far better than buying an apartment. However, it may not be feasible in big cities like Bombay, because Bombay you don't have land to buy at all. You will not get house. Even in Bangalore you have a choice. In Chennai you have a choice. In Hyderabad you have a choice. So if you can afford to buy a house, better to buy a house or buy a plot and construct any day better than buying an apartment. But if you want security, it all depends on the need. If you have aged parents, if you have to go to US, and if you want security, then buying an apartment is safe because everything gets taken care. So it all depends.
Okay. The next question is, I'm so sorry, sir. The next question is, how CIBIL score affect on education loan? Sir, I don't think they'll affect on the CIBIL score of the education loan, right, sir? Says CIBIL is considered?
Yeah, it is considered, but when there is morat, there is no impact. When interest had to be paid, and if interest is not paid, then it will impact CIBIL score. It will deteriorate the score, and if EMI is not paid, it will deteriorate. Under morat period, because there is nothing due, and therefore nothing needs to be paid, and therefore there is no impact. So till such time interest or the installment starts, there is no impact on CIBIL score. Once it starts and when there is a default, it will impact the negative side.
Okay, okay, sir. Another couple of questions we'll take up, sir.
Sure.
Why most people go to bank for home loan rather than the HFCs?
I think the notion is, I think it's a myth. I think it's a myth. We have so many banks in a country, and some banks are even as old as 100 years. Right? Today, you have so many HFCs thriving. So I think when we have government companies, why do we have companies like Infosys? Why do we have companies like Wipro? Why do we have companies like Mindtree, Oracle? When we have government colleges, why GIBS is there? I think that answers the question.
Absolutely, sir. Thank you so much for that. Okay, somebody is thanking you. Awesome session by Girish sir. Do you take sessions in GIBS, sir? Want to meet you, sir, when I come to the new session.
Sure.
I'm sure you will be meeting, sir. Will blockchain have any impact on the finance field? I think again a different.
Please come again.
Will blockchain have an impact on finance field?
Blockchain, see, eventually there's going to be some impact. It may take some time, but you will definitely have some impact, which can't be quantified at this point in time, but definitely it has.
Yes. Okay. Sir, we'll take up the last question. Sir, we gave home loan for compulsory property insurance, but when we gave a top-up loan, then compulsory property insurance. I'm sorry, I didn't get it. I'll read it again.
So I'll tell you. So basically, what happens when a home loan is given, there's a property, and there is somebody who's taking a loan. So for the property has to be insured. That's called property insurance. Because tomorrow, if there are floods and if it gets washed out, obviously, right, and therefore there has to be property insurance. So insurance on the property, and somebody is taking a loan. So tomorrow, if something, God forbid, something happens to the loanee, then what happens to the loan? And what will happen to the kith and kin of the loanee? And therefore, there is a life insurance which covers life of the individual and also covers the loan. For example, there is a customer, let us say, who takes home loan, has two options. He can take property insurance. He can also take life insurance. So, for example, the loan is 20 lakhs. He takes life insurance, which covers 20 lakhs of the loan as well. After 6 months, God forbid, something happens to the customer, and if customer dies, the insurance company will pay the outstanding amount to the housing finance company, and the property is free for the legal heirs. And therefore, insurance is not mandatory. Nobody can enforce customer to avail insurance. It is optional, but it is always beneficial for the customer if customer opts for life insurance to cover his life and take care of his family in any eventuality, and also covers the property, because recently there was, I think last year there was floods in Chennai. We know what happened in Chennai, right? So that can, and probably I think 2.5 years back, same thing happened in Kerala as well. So it's always better to cover both property and life. And this is what even the insurance companies and all the housing finance companies expect customers to do.
Okay. Thank you so much, sir. Sir, there is one small information required, sir. How do we get this PPT? So I hope you'll be able to share this, sir, with
I
us.
have shared this PPT with Lakshmi, so you can
Sure,
take it from
we
now.
can just
Yeah,
share it with the students.
yeah, yeah, sure, sure.
Thank you so much, sir. It was indeed a very informative session for all of us. I mean, we have got a lot of clarity when it comes to home loan because we always consider home loan as a lot of difficult task. It has a lot of formalities to be done, but you have explained us in very simple terms. So we are really thankful for that. And moving forward, GIBS would like to extend a sincere thank you to Girish sir for being a part of this webinar series, and to all the participants for being always overwhelming when it comes to GIBS, the webinar series. And a big thank you to dear participants. We are really obliged for your overwhelming responses. So kindly note, GIBS has an state-of-art corporate infrastructure, and you can also meet the team of GIBS as and when you visit the premises. So you can watch all these videos online, which is available on YouTube. So probably even this video will be available on the YouTube probably sometime later, so that we can just have a basic editing in this, and we can send it across on the YouTube. So kindly note, for all the participants, your certificates will be will be sent to your email on 20th of this month, that is day after tomorrow, on your respective email IDs. And do follow us on the social media platforms. And once again, Giri sir, thank you so much for
Thank you.
sparing time and sharing your information with all of us, sir. Thank you, pleasure having you here, sir.
Thank you.
Thank you so much, sir. Bye, sir.